Hello and welcome to another episode of interest.co.nz's Of Interest podcast. I'm Gareth Vaughan. Today I'm joined by Blair Turnbull, who's the Chief Executive of Tower Insurance. We're going to talk about the intersection of climate change and insurance. Hi Blair, and thanks for joining us. I guess insurers are noticing extreme weather events almost as much as the people caught up in them these days, given that they often lead to a whole lot of insurance claims for you. So I just was thinking, to kick this off, can you tell us what Tower's data is telling you about the severity and frequency of major weather events over recent years?
All right, thanks for having me, Gareth. And yes, certainly we're all very focused on large floods and storms at the moment, and climate change is one of those everyday conversations around the kitchen table. Well, certainly when we look at it and we look at the data, and we look at a lot of data, as you would expect with an insurance company like Tower, the data is quite clear that the frequency and the severity of storms, i.e. how much they cost and how often they come around, is increasing. In fact, if we look at the last 10 years, the number of storms and events have pretty much been the equivalent of the previous 45 years in terms of the frequency of them, and the severity is significantly up. If we look at just the last few years in particular, it's over $1 billion worth of claims coming through. So they're very much part of our daily lives, and we expect that as Kiwis. We know we live in this wonderful island in the middle of the Pacific, and so we're used to having storms come up from Antarctica, but also increasingly now down from the tropics, and that's something that we haven't seen at the same level of frequency as we have more recently.
That $1 billion figure, is that an industry one or a Tower one?
No, that's an industry one. We've had over 10 large events in the last 2 years, and that's quite a lot. So in events, we just for clarity, in terms of events, the events we classify as an industry, so that they're multiple houses, businesses impact during one period.
Yep. And I guess that the type of events seem to be broadening too. We seem to be having more tornadoes as well, for example, or maybe I'm just noticing that more in the news.
If we look at the last 2 years, we've had 2 tornadoes out of those roughly a dozen events. So certainly, the Papatoetoe tornado, and more recently the one in Levin. And so again, tornadoes are come about as sort of warm and cold weather come and mesh together, and that is creating tornadoes, and that's something you do see from more tropical-based storms. But actually, predominantly, around half of all of our big events, natural events, are flood-related. Around 1/4 are sort of big storms and the like, and include tornadoes and hailstorms, and we all remember the Timaru hailstorm. We don't get too many of those, actually. And then the balance is around things like earthquakes. And it's also conscious that, at the moment, I was in Sydney last week. I was lucky enough to have a bit of a flight in and get over and see some of the reinsurers. And we're going through a period now where we're reminding everybody that we're not Australia, and some of the weather patterns that are coming through Australia are quite different to our natural large events. They certainly see big hailstorms that we don't see quite as much here in NZ, but also they're seeing a lot of those really big storms that do sit around for a long period of time.
They sure are. Now, as an issue, where does climate change rank for insurers now, in your opinion?
Yeah, look, it ranks right up there. I guess in the short term, we're all worried about inflation, we're all worried about resources and the pandemic, but actually over the medium to longer term, the single biggest issue, arguably, for us as a society, but insurers in particular, is climate change. And maybe it's just worth repeating that, is climate change is not an insurance problem, it's a societal problem. And it's probably, arguably, the single biggest environmental issue that we will all face in our lifetime.
In April, the government released a draft National Adaptation Plan. So it's quite timely to talk about that at the moment. In this, it says this aims to help communities adapt to the unavoidable impacts of climate change. And it includes a section on managed retreat, which would potentially include retreating from some coastal areas and river floodplains. And there are plans to develop legislation to support this. According to the draft National Adaptation Plan, about 1 in 7 New Zealanders live in areas prone to flooding, where there's about $100 billion worth of residential buildings, and they say another 72,000 people live in areas projected to be subject to extreme sea level rise. How is Tower thinking about these areas that are really prone to, I guess, sea level rises and flooding? And there's some suggestions around and predictions around that some of these areas may lose insurance altogether within a decade or even sooner. Are you at the point yet where you're looking at parts of New Zealand and thinking that maybe you wouldn't be offering insurance there for much longer?
There's a lot to unpack there, isn't there, Gareth?
There is. Sorry about that. Yeah.
So let's first things first. When we see climate change, we see it as 3 steps. The first is let's understand the problem more. Let's look at the data, and pleased that you mentioned data first up. We spend a lot of time looking at data. I'm a self-confessed data geek, and we look at a lot of data, and I think that's really, really important. It tells us the insights, it tells us the correlations of what's going on, and we've got lots of really smart people working on that. We work with the University of Waikato in the Bachelor of Climate Change, where we do some scholarships there to help do data. We work with some of the best data providers globally, like RMS, who are in over 100 countries doing big risk models around climate change and modelling like that. So we look at data a lot to help us understand the situation and understand what's sort of fact versus myth. So the first thing which I like about the National Adaptation Plan is, first of all, let's look at the data and understand that. Secondly, then we can all look for sort of short-term actions to help mitigate some of those trends coming through, and flooding is a big one. And then thirdly, in the sort of over the medium to longer term, we can become innovative around how we can approach it. But firstly, looking at the data, and again, we're in the middle of the Pacific. We are exposed to a lot of storms and flood events, and certainly we've done the modelling right across the country with RMS, right down to an individual home level, and we've plotted all of that, and we've put homes on a low, medium, high, or very high risk profile. And part of that model that we've developed takes over 350,000 different simulations of events, over 50 years of history around events, flood events, etc. And so it's pretty accurate, and we've modelled it all which ways. We've also shared it with councils, we've shared it with the government, we've shared it with our customers, which is most important. We've actually presented it back to our customers. So if they go into My Tower, they can look at their lovely home and they can see, what their risk profile looks like from the point of view of flood as well as earthquake. And in the future, this time next year, we're going to add in the coastal erosion piece as well. So what we're really trying to do as the first step is use data, use those insights and share them with our customers, communities, councils, government, to help start to paint a picture of what it looks like from a flood point of view, earthquake point of view, etc., coastal erosion point of view. Then we can be informed about what steps we can take in the short term and longer term. And the National Adaptation Plan now starts to look at that data, but also starts to get everyone around the table. Collaboration is a key part of that plan from my perspective. I think it's great. This is an industry that's notorious. Insurance is an industry that's notorious for not working together. And here we are working together, ICNZ, with other insurers, with councils, with government, to start looking at the plan. And when we can talk a little bit more about what some of those actions in the short term will look like and what some of the longer term actions will look like. And bearing in mind flood, natural perils, this is, again, climate change is not an insurance problem. It's a societal problem, and it's not a Kiwi problem. These problems are happening all around the world. Yes, with our neighbours in Australia, we see that at the moment with their East Coast floods. We're seeing places like Florida who really are struggling. Europe, this time last year, had some really, really big floods, massive record floods through Germany and the like. UK have had big floods. So this is a global societal challenge that we have. And what I do get excited about is New Zealand Aotearoa. We have the opportunity, a bit of a rapid testing area to actually work through options, because we are conscious of it. we are very sensitive to it, and actually we've got some really good data and smart people working on it.
Okay. So at this point, there's a lot of informing of people going on here, be it customers, councils, everyone, sharing your very rich data. There's no suggestion yet about stopping insuring certain areas, is there? But you have introduced risk pricing.
Yep.
Can you explain a little bit about what risk-based pricing means? How does this work? What it means for customers? And how are those whose premiums increase because of risk-based pricing, how are they reacting?
So risk-based pricing is all about looking at your individual asset, in this case a home, and sort of applying the risks for that property. So we look through and we look at that property and we see the risks associated with flooding, with earthquake, and then we make an assessment of risk-based profile of that asset, of that home. And then we set a price that reflects those risks. So the inherent principle is you only pay for risks that apply to you. So if you're in an area, maybe in Northland or an area like that that has a lower level of earthquake risk, you have a lower portion of your premium charged against earthquake. If you live in an area where you maybe have a high risk associated with flooding, you have a higher portion of your premium against that. And so we think it's a fair and it's a transparent way of insurance premiums and pricing. And also from our point of view, we then get the technical side of the risk for that asset matched with the premium. And again, it all comes back to being fair and transparent. I think people and customers are very understanding. They know their homes and they look at the premium and they want that to reflect actually the risks associated with their lovely home. And so they can look down, the neighbourhood over and say, well, this is why my premium's this, because I'm in a higher risk area or a lower risk area. And I think people understand that. Part of the challenge we have as an industry is 2/3 of our customers say they don't understand their premium. And I find that very frustrating. And I guess we're on a mission to help customers, first and foremost, get protected, but understand their premium. And so when in the past, when insurers have done these wonderful big models and lots of data, they've almost kept those secret sauce to themselves. At Tower, we firmly believe actually in sharing it is the best way forward. So when you go on and you look and get a quote from us, we will tell you what your risk profile looks like for your home, low, medium, high, very high for earthquake and flood, etc. And then we'll actually show you the premium breakdown. And let's just say, for argument's sake, it's $1,000. We'll break the premium down into the allocation to flood, to general accident, to EQC levy for earthquake, to fire levy that we collect for the government on behalf of the fire services. And we'll break it down for this year versus last year in a really nice, simple way that fits on your phone, really nice, on a nice screen. And so that helps customers understand, okay, I've got this wonderful house. I want to make sure it's protected. This is the premium, and this is why that premium is. And if they don't, agree with it, they can give us a call and say, actually, that's not quite the case. But more often than not, the vast majority of people go, oh, thanks, I now understand why my premium is. And this is a long way, I think, getting back to the heart of this, is understanding, perils around this country and, knowing that this is your house, whether your risks, your home is high risk to flood or not, and what you can do about it, and helping people mitigate those risks.
Has the move to risk-based pricing seen you, I guess, lose customers in high-risk areas? Has it reduced your exposure in some of these areas? I mean, I'm guessing probably most of your competitors are doing similar things. And if your exposure in those areas does reduce, is that something that you're happy about? I mean, I guess, at the end of the day, you're a business, not a charity. So you do need to make a profit.
We're very happy when customers understand their insurance, and that we believe if we help customers have the right insurance for their assets and it's priced competitively, and we do it really in an easy way so that you can do it online or call us, then people will stick around and they'll bring more insurance to us. That's our premise, quite unashamedly. We're quite open about how we feel we've got a point of differentiation. When we did risk-based pricing for flood, about 90%, so 9 in every 10 customers, had a small reduction of about up to $25 on their premium for their home. About 9% of customers, 8 or 9% of customers had an increase up to about $50 as their homes were maybe in a higher area to flooding, propensity to flooding. For customers who are very high, we had a one-to-one conversation with them and called them. It was about 1% of our portfolio, and we had a one-to-one conversation with them to talk through their options. And some of them have chosen to leave, but now they feel fully informed, and others we've put in some steps in place to help them make it more affordable, but recognising their lovely home has a higher risk to flooding. And that's something that we feel is important, is making sure they're informed about it.
Back to the National Adaptation Plan, the Insurance Council of New Zealand, or ICNZ, they made some strong points in their submission. You'll be familiar with their submission. One of the points that I thought was really interesting was that they said they want to see, people being prevented from building new developments in high-risk locations where the risks will become intolerable over a 50-year horizon. I guess probably any of us can anecdotally think of developments that we've seen in the last few years and wondered, crikey, are they really going to build that there? To what extent are councils still consenting developments in exposed places where perhaps they shouldn't be? And how can we change this? Because councils, at the end of the day, a lot of the councils around the country have small ratings bases and they're hungry for income. So it is a challenge, isn't it?
It is a challenge, Gareth. It really is a challenge. And not necessarily an easy one to solve as well. And through that plan, so the first step is inform. The second step is now start to help and mitigate in the short term and then the medium term. And in the short term, examples are, please stop building in flood-prone areas. And just taking a step back here, just reminding ourselves, New Zealand, despite a wonderful association and deep value and passion around the environment and protecting our environment and sustainability of our environment, we have taken back about 90% of our wetlands. We've lost 90% of our wetlands, and wetlands are Mother Nature's way of absorbing a lot of rainfall from rivers and alluvial flooding, so flooding on top of the ground. So we've taken a lot of those away, and we've decided a lot of those are near the coast and rivers, and everyone loves water here. So of course we've taken those mangroves back and we've put them into nice flat grassy fields and build houses on them. So we have a lot of newer subdivisions that are in areas prone to flooding, and that is causing problems. And our key point when we went out about this time last year, we went out and we spoke to 212 different councils. We shared our models. We compared our models with their models and started to really highlight in a simple way these areas in your cities and your towns are prone to flooding. Please, first and foremost, stop building on those areas. That's what the National Adaptation Plan is saying. Please stop building on those areas, and then start building on areas that are much lower propensity for flooding, etc. That is key. That is really key. What's compounding the problem in a number of towns and cities around New Zealand is our infrastructure, our piping is over 100 years old. This is not just a Wellington, Lambton Quay problem. This is a problem for many of our cities which didn't envisage the population and the size of the buildings, etc., 100 years ago when the piping was put down. Three Waters is a major initiative, and certainly not, everyone's got a view on Three Waters, but you can't deny the fact that much of our infrastructure is just tired and not suitable. And often when it's connected to the coast and you get a king tide, you get this king tide coming in, combined with high levels of precipitation or rainfall, the water's got nowhere to go and it just backs up. And we've seen a few examples, Plympton know this well. That's what's happened 2 or 3 times in the last few years. In their case, that's not picking on Plimmerton, quite the opposite. Love Plimmerton, but that's just an easy example to highlight what happens when you've got higher tides connected with higher precipitation. So we've got, first of all, yes, let's stop doing those subdivisions. That comes back to the first point, awareness, awareness, awareness. Second point, let's stop compounding the problem. And then the third point has to be fix infrastructure. Let's not build on those higher propensity areas for flooding. Let's see if we can rebuild some of our wetlands to help absorb runoff. And ultimately, I know everyone talks about managed retreat, and I was, in a previous life, worked in insurance in the UK for many years, and contributed as one insurer to the flood re scheme. And people point to that. It was very, very different. That's a 30-year plan where they had a real problem, immediate problem, with houses being flooded almost annually. And so it was a real problem. So it was quite different to where we are. We don't have uninsurable pockets at the moment. But if we look forward and these trends continue, that is a risk. And so plans like the National Adaptation Plan, those discussions, the Natural Hazards Bill that's going through, that's really, really important to now start informing ourselves and responding.
You mentioned going and talking to councils, 212, I think it was, an awful lot of councils. If you're talking to them about where they're consenting new developments and new housing and sort of suggesting to them maybe that's not the best place to do it, what sort of response are you getting from councils?
Look, we've got an overwhelmingly positive response. We wrote to all of them. We shared at a relatively high level all the information, our modelling, and we went through our modelling with them, and we made ourselves available for anyone who would like to talk to us. Around 50 councils came back to us and said, yeah, we'd like to have a chat. And so we went with them and we actually showed them the models live, and we went around lots of different suburbs and showed them where we see what our modelling is telling us and how we can share that back with councils. And we're really open to do that. And I think it's been really, really positive. Also, we've attended a number of the stormwater conferences and water conferences around the country more recently, often linked to Three Waters. But we've done a few of those. I've keynoted some of them. And I think the response has been great because, again, we've got lots of data. We, as an insurance company, we do want to be there to help protect homes, but we also feel it's really important from a tower point of view to help mitigate some of those things. And often insurance is described as the ambulance at the bottom of the cliff. We're there to write the check out in the event something happens, a flood or an accident. What we'd also like to do is be preventative, be at the top of the cliff and say, hey, let's avoid some of these things. And that's been our approach with the councils, and it's been really positive. It has been really positive.
You mentioned flood re before, which is does feature in the draft National Adaptation Plan. It's great that you're familiar with it. So just for the benefit of the listeners, it's a UK reinsurance scheme supporting the affordability and availability of flood insurance for homes at the highest risk of flooding. It's owned and operated by the insurance industry and is funded through a mix of compulsory levies on residential property insurers and reinsurance premiums on flood-prone homes that are reinsured with the scheme. It is interestingly only available to homes built before 2009. There are questions in the draft National Adaptation Plan, Blair, about it. You're familiar with it in the UK. Would you support the introduction of such a scheme in New Zealand?
I think we can learn from flood re, but our situation here is very different, and it would be wrong of us to just copy-paste that. It would be wrong, and I say that having worked intimately with the UK situation and having a good handle on what we're doing, it'd be wrong. So I think we can learn from what they've done. We can learn from what's happening in the Australia right now, which is really close to home. We can learn from other areas, even as close as the Pacific in terms of take learnings away and then bring that back to New Zealand. But I think we've got a unique situation in terms of how we approach our housing here and how we approach mitigation factors to it. Just coming back to flood re, and some people may or may not be aware, but flood re was only applicable to some homes. So we're all familiar with EQC. That levy is applied to all homes across the country. So, and everybody takes a portion of that levy, and that's changing later this year, and people will start to be more aware that it's actually quite a big chunk of their premium. The flood re was only applicable to some homes which were, flooding with higher regularity and frequency to the point they were becoming uninsurable, so that the losses were too much for the insurance sector to take. So they collaborated with the government and they put this in as a medium-term temporary step to then enable them to do a better fix to mitigate the flooding, or else there would have been uninsurable pockets immediately in the case of the UK. That's very different to New Zealand, where today we don't have uninsurable pockets, and we are openly discussing it, and we're looking at short, medium and longer term solutions. However, if we find ourselves here in 10 or 20 years and are not taking those steps and continue to build on, recovered wetlands or whatever, we will have those issues emerge. And with the things that we want as an industry and the things that councils and the government want right now is we don't want that to happen. So we have a little bit of time, but not a lot.
Reinsurance is obviously a very important part of the insurance world. I guess reinsurance is often described as insurance for insurance companies. You mentioned you'd met with some recently. What message are you getting from reinsurers about climate change?
Yeah, look, again, the theme they're pointing to at the moment is this is a bit of a global phenomenon at the moment. This is not a New Zealand problem or Australian problem. They're seeing floods right across the US. We're seeing them right now at the moment. Actually, there's significant floods happening in Asia, and we can all remember back to around about a year ago, there were a number of very, very significant floods in areas like Germany and down towards Denmark and the like. So we're all faced with climate change. Climate change is the single biggest environmental challenge that we have as a society, in global society. That said, when you're in the middle of the Pacific, you are seeing the frequency and severity of these storms picking up. So what reinsurers, when we spoke to them more recently, were highlighting that actually they've taken many years now in a row of losses, and they are, looking very closely, as you would expect, about where they want to have insurance for insurers. And, especially more recently with the floods in Australia, which are a record $4 to $5 billion events, they are questioning whether they want to be down under. And that's a concern for us because we rely on that capacity. So in our case, we have category cover up to just below $1 billion, and we need that cover. And at the moment, we mix and combine earthquake along with flood and the like. And we're now over 10 years past Christchurch, so those memories are sort of fading a little bit. But earthquakes combined with flood raise concerns, and they're concerns for reinsurers. What you are seeing, though, is regardless of capacity for a second, what you are seeing is the rates increase. Because, the insurers have been faced, a number of them, the reinsurers, with a number of years now of negative profits. And so they're wanting to stay in business too, and we want them to stay in business.
If they're questioning whether they want to be down under, that's potentially pretty significant. What happens if they decide they don't want to be down under?
Yeah, certainly the conversation we're having them is highlighting. We're not Australia, so just a reminder, we do have a lot of floods. We do prepare for floods, and I think we're getting really good things. Even this week, we're getting really good at putting warnings out, highlighting to people, hey, remember, put your trampoline away for the winds, do these things, help batten things down. In the case of flood, be prepared for these things. So I think New Zealand's quite proactive right now. We're very conscious of it right across New Zealand. So what we're doing is highlighting this is our case. In terms of floods, we do get them with reasonable frequency, but often not to the magnitude of what you're seeing in Australia, which is big storms that are inland storms that have huge areas of catchment that then actually the river flooding is significant downstream, and that's causing the problems. In New Zealand's case, quite different. We are an island. A lot of the runoff is quite quick, and so it's a lot of alluvial and palluvial flooding, i.e. water sitting on the top, and creeks and smaller rivers that cause the damage. And we've mapped those out quite well in the case of New Zealand. So it's quite different. So the first thing is what we're saying to insurers is, please don't just join us together and say you're the same. We're quite different. And the nature of those storms and events are quite different. I think also in the case of Tower, what reinsurers do like is things like risk-based pricing, because we are working with customers and communities and all the rest to really understand it and to help mitigate it and to also price appropriately for it. And so I think that's really well received from reinsurers. And I think, the third point is, as a country, we do have this reputation of being proactive around how we do things. We have taken a net zero approach from the current government, and we're being proactive around EVs and the like, and we're having these conversations about three waters and et cetera, et cetera. So they are seeing at the macro level, they are seeing the country taking action, which is good.
You mentioned that there could be pockets of, and I may be taking your words a little out of context here, but pockets of uninsurable areas or very difficult areas that do develop in time. One of the things in the draft adaptation plan is managed retreat, as you mentioned before. What do we need to do to prepare for managed retreat? And I mean, are we far away from needing it in some areas?
Well, certainly today, just to reiterate, today we don't have uninsurable areas, but we want to make sure we don't have them in the future. And that's the reason we must take action. And we look at the National Adaptation Plan, and it highlights up to about 600,000 Kiwis could be impacted in the future if these trends around flooding continue. It also goes on to say around 100,000 Kiwis in homes could be impacted with coastal erosion and rising sea levels. So rising sea levels, roughly, over the next 10 to 20 years have been modelled out, and certainly the trend is the waters are warming, the seas are rising. That causes higher, more intensive tropical storms, and it also causes clearly problems with erosion. So, that's the areas that have to be taken together. I think we're quite good at modelling flood. We've got work to do in terms of modelling coastal erosion. And we've seen a little bit of what could happen. We've seen some of those events that created down in the sort of the Nelson areas that had a higher propensity to coastal erosion. We've also had an article this week in the Herald around the Port Waikato, and about problems that coastal erosion have had there. And that's right in front of us. And it's quite clear. There's some pictures highlighting some customers, their home as recently as 15 years ago, their view, which was over the sand dunes to the water in Port Waikato, and then they're looking at it right now, only 10 years later, and going, wow, the water's on my doorstep pretty much. That's real, and that's happening, and it's happening because of the intensity of the storms, the wave action, the coastal erosion, the rising sea levels. So these are real problems, and they're problems that the key thing about the National Adaptation Plan is we're around the table talking about it. And I think, this is what's really nice about this podcast, Gareth, and how people are seeing this is let's have the conversations, because out of those will come actions. Some of them will be small ones we can all play a role in. Other ones will take, more money and investment in finance, three waters, etc., in longer term.
Yeah, look, and there are some huge decisions out there to be made in all of this. And, I mean, you'll be familiar with what's been going on in Westport, with their flood walls that they are looking at, and a cost of $54.4 million to save Westport from 1 in 100-year flooding. I've seen reported recently. And obviously the council there it's a small town in New Zealand, very famous, historic part of the country, but it's a lot of money for a small town. And with everything we've been discussing, reinsurers are getting nervous. You guys are doing risk-based pricing. We're talking about, managed retreat, all this type of thing. Ultimately, this is going to involve a lot of money. And I guess the question is, a lot of people will be wondering who pays, and if these pockets of uninsurable areas do emerge, who pays?
Yes, and that is one of the biggest challenges. And you take the Buller example. They're looking at a wall around their town, which is challenging in its own right, because by nature, I don't think anyone could imagine a wall around a town in New Zealand. You still need to get in and out of the town, and it's not a moat around it; it's a river. So, that's challenging. I'm very pleased that they're also talking about areas of higher ground where there's the opportunity to potentially move those homes. Again, the good thing that we have right now today as Aotearoa is we have a finite number of areas that have a very high propensity to flooding, and you just talked about one of them in Buller. So this is not big areas. I was in Brisbane 3 or 4 weeks ago. They have some areas there where up to 30% of the suburbs are getting consistently flooded. That is a big problem, and that's inner city homes on the river. So that is a problem when the financial side of it starts to become really prohibitive. So in New Zealand, we don't have that problem, but we must start taking action to understand those areas, get the data, get the insights, understand our actions, and certainly not wait for the next flood before we really start to make decisions. In the case of Buller, I think it won't be a single answer. They'll have to find ways to mitigate against the river, but they'll also really start to, when we rebuild those homes, and we've rebuilt a number more recently from those floods, we are encouraging the council to think about land and whether we can start to relocate some of those families to an area that doesn't have such high propensity for flooding. I think we've got to be honest about that conversation and have that conversation. We've invested a lot in other areas of our society and challenges. This is an area, I think, in some areas, finite number at the moment we have to look at.
And I guess in terms of that question about who pays, probably ultimately it's everyone, isn't it? The government is going to have to chip in, local government, private sector, everyone really.
That's right, and these are the actions we can take. I think the key one is to stop the problem getting any better straight away. Don't build on those subdivisions.
Getting worse, right?
Yeah, getting worse. Stop that.
Stop it getting worse.
Stop it getting worse. Definitely not get better. So we've got to stop that. Yep. Don't compound your problem. Understand the problem. Don't compound it, and then we can take some actions. And that way, if we do it now and we do it early, we can still afford to do it. If the problem grows, it becomes more problematic.
I just want to touch on, we're talking mostly about, I guess, residential property in towns that are in flood-prone areas, but just touch on primary industries too, agriculture, fisheries, aquaculture, and businesses more broadly. One of the things in the draft adaptation plan says less than 10% of businesses had assessed the risks to their business from a changing climate, and less than 20% intended to take action to reduce their risks over the next 5 years. I'm not sure where they got those stats from, but that's pretty interesting if that is indeed the case. What are your? You offer insurance in these areas, so what's your message, I guess, to the rural sector and businesses more broadly when it comes to climate change?
Look, I think this is a really interesting one, Gareth. 2 things happened recently with storms, and there were 2 key learnings. The Canterbury weather bomb, so to speak, of about when we just over a year ago, really high intensive storm, record levels, largely hit rural areas on the doorstep of Ashburton, but largely hit rural areas. The learnings from that was the maintenance on those rivers arguably had slipped a little and helped contribute to the pluvial flooding. So there was a learning there and a reminder that we have to do river management and maintenance as part of our flood mitigations. QMU, the flood event, again reiterated that the creek that went down and flooded was part of that reason was, yes, there was a lot of rain. There was a lot of rain that evening, but also we hadn't maintained the creek there, and as a result, it quickly spilled over. Could we have maintained it better? What's interesting, linking it back to businesses, is businesses in the past, think back 100 years, we started to do our town planning, were often based around creeks and rivers because that's where they would discharge. And so what we do see is a lot of businesses, even though today they're technology-based and all the rest and they don't rely on a creek or a discharge or whatever, but they're often, those industrial areas are based around a creek or a river or something like that. And so actually, again, when we look at the data, quite a lot of business areas have high propensity to flooding because that's what we planned for 100 years ago, even though it's not applicable today. And so often those rivers also, because there's not people walking all over them, don't necessarily get the maintenance and the support of other areas where parks and recreation and so on. So there's a bit of a double whammy. And so one of the learnings there, and the ones that we've talked about with a few councils, is looking at your business areas, looking again down to a individual business level to see the risk profile of that business to help understand it, and what can we do about those areas, and understanding that segment in more detail. Because predominantly to date, the focus has been on residential in new suburbs. But actually, when you unpick it a little bit more, you see some quite distinctive problems and challenges around business areas and communities.
Blair, it's a fascinating conversation, and I'm sure we could go on, but I think we probably better leave it there. That's Blair Turnbull, who's the CEO of Tower Insurance, and I'm Gareth Vaughan of interest.co.nz, and this has been another episode of our Of Interest podcast.